Hello folks, I'm Ellie Little and this is your weekly TA Wrap. We take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened last week and what clues does it give us about the coming one. I do this show every Sunday night live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Folks, we had a big bounce back into the week, Thursday, Friday in particular. And it feels to me as if, the popular perception here is the worst is over. And that from this point on, no problem. We're going right back to the highs, going to have another one of those V-shaped recoveries that we've seen before and have gotten so used to over time. And what I'm talking about is what we've seen over and over and over before, where the market just comes back, right? And then you have the V-shaped recovery, and that recovery, of course, would be like this if, in fact, it's going to happen. Will it happen? Will this be another repeat of last year in terms of these V-shaped moves? Well, that's to be seen. It feels to me as if most folks are being pulled into the complacency, if you will, in terms of this ideal coming true. What looks to me like what's really happening here is you've got a range that's being tested out, a higher and a lower range inside the big range. Right? You got a lower half and an upper half. The lower half down here, upper half up there, you're right at the middle. Does that mean we're going to break higher, go to the upper half? Well, it's certainly going to test it and try. Will it break? We don't know yet. Right? We know that we've had volume tail off as price moves up, but as always, that doesn't tell us that it's going to fall. It simply as it has a lower probability of continuance, especially if it gets over swing point highs. At this point, there's a range trade setting up. There's a range trade actually on the weekly as well. You push down to the bottom. You push down to the bottom with volume, right? As you came down into this lower price zone, even though there was a lot of volume there, you pushed more into it. And when you do that, that says that you're probably going to come back and retest it at some point. You can see a large supply overhead, right, in this resistance zone that's up here. You've got multiple support zones now underneath. You have a range trade, as we just talked about, on the daily that looks a lot bigger than it does here on the weekly, but that range is in effect lower and upper half. That's what's happening. That's what's happening here on the S&Ps. Now the S&Ps are not the strongest sector, they're not the strongest index out there. Matter of fact, the one that is the strongest is the IXIC, the NASDAQ composite. The NASDAQ, the low here, 113 on it. You pushed into it with 109, so you can see the same idea. You've got a range type trade that's setting up, right? There's a lower half and there's an upper half, and this is just barely into the upper half at this particular juncture. If you bring it over and look at it on the daily, you can see that same sort of a range has set up here in the same format, right? You got a lower and you've got an upper, and it's just up in the upper half now. So range trades potentially can break either way. When they do, they usually take a little while. You got, you know, the top, if we do the NASDAQ, you got the top at 42.46, you got the bottom down here at 39.68. That's leaving about a 250 point range. When it breaks out, typically the range will double itself in terms of size, and so you can see that once this thing breaks, whether it's to the upside or to the downside, right? If it goes to the upside, right, 250 points that way. If it breaks to the downside, 250 points that way on this time frame. That's always important to remember. The time frames are important. In this particular case, the weekly, the dailies, they're going to have the same ranges on them. And because it's on both of them, it will probably take quote-unquote weeks to play out once that breakout occurs. So large range trade, inside that, you're about in the middle of it. That says that you know, it's kind of a coin flip in terms of where it can go in terms of reward and risk. In other words, if I were to look at this and independent of any other signals, if I were to look at this, my reward is almost exactly the same as my risk at this price point. Makes it very hard to do anything. If we look inside of it, there are some small clues of things going on. You've gotten over some key on the strongest index, which we're looking at. You've gotten over some key areas that it probably should have failed at. For example, here on the IXIC, this area was a key area. It got over it. Now it's support. It does have one more key area right above it here that it's going to try to hit tomorrow. It's coming into it right now. That, to me, those are the two key resistance zones on the way up. If you get past that, there's only one left, and that's up here towards the top. If we go to back to the S&Ps, you've got kind of the same situation over there. You've got some key areas of resistance on it. One of them we just came into and we got over. Blew right through it. Didn't even act like there was anything there. The big one next, as it moves up, will be into this zone. Above that, you know, and on the S&P you've got multiples. On above that, you have this area here at the highs, and then finally at the top you have the other area. And actually one could draw this whole zone up here as a zone. So two more zones basically on the way up. This should be the big one. If you take and clean this off, you can also look at this as a retest regenerate zone off of this low that was broken. That's why this area should be difficult to get over as we come back. That's the S&P. That's one of the weakest. That's one of the strongest. Now the one that makes or has been making the best signals for us has been the Russell. And the Russell is actually a good indicator right now for the strength or the weakness of the economics of this country. Because the Russell is primarily about selling to the domestic market, right? I mean, that's where they sell. The majority of the products that the small cap manufacturers, retailers, whatever they may be that fit in the Russell, they're typically selling their goods to the American consumer, not overseas. And the Russell, much weaker in terms of the bounce that it's getting. You can see here that consolidation zone that we saw back on the S&Ps, where the S&P was up above it, right, trading right above it already. Russell hasn't even been able to get back to the zone yet. So you can see a lot more weakness in the Russell. If I look at the Russell and look at the key area, that key area to me is in this zone as it comes back up. You got the big wide price breakdown bar here, right? You got a nice big volume bar off of the quad witching that took place back in December. That should be the difficult spot on the way back up for the Russell. If it gets over that, well, then it can also go back up and do a retest regen on the last swing point that it didn't get to, which is up here. when you look at these range trades, you have to think about them in terms of the long-term trend. And so if we just use the Russell as an example and look at the long-term trend here, it's fairly clear the long-term trend on this particular index has been to the north, right? It hasn't been to the south. But you can see, again, just as we saw in the SPX, that you tested the high volume low, and actually the low is this bar. Let me clean it up here. The low is this bar right here, right? Not the high volume bar next to it, not this one. You tested it on quite a bit more volume, actually over both of them, especially over that swing point low that it broke, or actually tried to break on the weekly, but it held. Again, when you see that kind of action, that tells you that more than likely this thing's going to trade in some sort of a range for some period of time and then eventually break one side or the other. But what I was going at with the position, or with the point, is that this has been up for a very long time. So when you're doing a range trade, you have to decide to yourself when you're starting to make that trade, is it a one side or is it a two-sided range? What do you trade, one side or both sides? And I've talked about this in my books. I've talked about how range trade sets up. Typically, this is not one of the the range trade setup that you normally see. It's a little bit different, but it still sets up a range in that it tested the bottom with volume, which means it should try to come back down there and test it again. But the trend is up, and if you're going to err on the side, one side or the other, you want to err on the side of which the trend is on. In this particular case, you'd probably one side trade this range to the upside. All right, so that's the indexes. The sectors, there's really not much to say about the sectors, so I'm not going to dwell on them. I'm going to go over to the OX markets and look at the OX markets, in particular zero in on the bonds to start with. The bonds are trading pretty much the same trade to the opposite side right now. The TLT has been working lower as the market works higher, and vice versa. The TLT is trading into this large bar here. That's where the decent volume is on the way back. It's into the bar. It's still into the bar. It tried to trade under it, back over it, but it had more volume on Friday. So that suggests it's going to trade down in there again and maybe try to make it to the bottom. The TLT actually broke swing points on the way up as it broke out. And so there's multiple places for this thing to come back and try to do retest and regens, although you did get some slight retest regenerates off the prior two highs. That top one did not get tested. That price point is, let's see, 105.41. You're trading at 106.79. So another $1.30 on the way down. That would be towards the end of this bottom here, right? And now that I'm looking at it, that actually did do a retest regen already. So I'm mistaken here. You got immediately a retest regen. So I would strike that notion now that I look at it more carefully. And what we should consider instead of that is simply this zone that is created off of this bar. So that bottom is probably the target. And let's get a number on that, 105.88, which is about a buck lower. So somewhere around a buck lower, this thing should try to find support and flip back around if it's going to. One thing we've talked about before, and it doesn't look like it's over, is this has set up multiple ABCD structures on the upside, and each time it's done it, it's filled them out, right? And it's continued to do these all the way up. Now it's doing one on the backside. Maybe it could do an ABCD back the other way. That's always the way it is when you get some sort of a pullback, and that's the same thing you see on the indexes. So on the indexes and on sectors as well, you're going to see both potential ABCD down, right, bearish structures, just as well as you see potential, when we get a little pullback off this 3-day run, you're going to see potential ABCD structures to the upside. And how they pull back and whether they actually return and then break over it, either way, that's going to set up what the move is going to be, right? So that when you come back and you test that same area, if you break over it, of course, you get the ABCD structure and you try to reach up and hit the D point. And that's the way these markets are all set up. Both sides now potentially are going to set up D points that they're going to try to reach for. And the question will be, which one is it? And these are going to set up on the daily charts, right, inside that big range probably is the way it will probably pan out. And so you got to be able to pick up on that and trade those if you're going to trade it. So the bonds look like they could pull back a little bit more, which would actually provide some juice to the market. So let me look at what the dollar's doing, although it hasn't been any much of a read. Okay, we came back with big volume, or you're back into this bar pretty deep now. The dollar itself is doing a big range trade still. I mean, this hasn't changed. This range trade, you can see how long these things can go on. You got a mid half here and another mid half down there, and now it's trying to get back in the lower one again. And it's traded this whole range for, on the daily here, it's been for about, looks like about 9-10 weeks. Still in that range, nothing's changed there. I was looking at the DBA just recently and trying to see if there was any trades coming up there, because I've been seeing commodity prices spike up, and I see a nice big spike up here on the daily. If I pull over the weekly and look at it, you know, this thing tested those lows, it got underneath it, really couldn't push down. Now you get a nice big volume spurt back up into this range. This thing also right now is a range trade, but the fact that you've got two highs over here now, right, this sets up an interesting test when it comes back up the next time. This is on the weekly. That could set up a nice big move finally in the commodity markets, and that's been missing for a very long time. Now typically commodities go up if we think inflation is going up. Nobody really thinks inflation is going up, so I'm not sure what's happening there other than speculation. And talking about inflation, if we look at the gold market, you know, there's expectations here the same way that this thing is going to break out. Swing point highs, right? It's broken swing point highs already, gotten over those, right? Every time it does, there's a lot of, you know, up and back type stuff that goes on. It's coming back up here again to test a swing point high and try to get over it. If it does get over it, you know, then you set up the potential to go to the next one. And in the gold market, you know, again, there's no inflation, and maybe there's some fear trade, you know, driving this. But the gold market has set up some decent ABCD structures on the upside in this run, and this is potentially another one setting up. So we'll see how this goes. Actually, it would be from here down now. Let's see if it can develop or not. Right now, you know, I'm not sure about the gold market. It's not clear to me if it can break out. Looks to me like the gold market also is trading in a larger range, and I'm not sure what the catalyst is to make this thing break out. The thing that the gold market did that was good is it tested these lows and wouldn't break. This is on the weekly. And so you had a test here, you had another test there, neither one of them would break. Now you're getting the push up off of it. You're coming into a swing point high. Of course, if you can get over this, you can get a bigger run. But there's going to be a lot of resistance on the way back here. If I draw this in, you got this little overlapping area here that's much more difficult to get over than that swing point high itself. So you could trade to the top of this bar, right? That would be the bar. If you get over it, and then of course, you know, there's other highs up here. This thing has potentially a large range. You've got the lower one you're in, and you got another one right above it. And so that big range is this whole area. If it gets into the top here and gets into this half, usually they try to get to the other side. You know, if they can start to climb up, then it gets the run and tries to get all the way up. And this would have two areas that would try to shoot for first, halfway up and then to the top. So gold itself looks like an okay trade if it can get over this, but it looks to me like it's going to have difficulty on this resistance zone that you see pointed out by the TA today charts. So gold, I don't know that's giving me any read on what's going on. Let's go over and look at Europe though, because Europe is, to me, probably from an overseas perspective, Europe and the Chinese market are probably the two key markets right now. And some might say Japan to some extent, but Japan to me is more of a market that's you driven by the policies of the central bank. If I go over to the CACs, okay, so the CACs, and I'm going to pull over the weekly on this one. If I go over the CACs and look at the CACs have been trading in a large range up here at the top, and again, most of these ranges usually break down into two roughly equivalent areas. The CACs just got back into the top of the range. Volume's expanding. It expanded on the weekly as it pushed into the lows. So one could, construe that as more of a, we're going to come back down here and test this again. So you're coming after that swing point low, you're pushing volume, but you don't quite get to it. So on this time frame, big range trade just like our markets. And again, when this range breaks, it's going to be a big move either to the upside or to the downside. It's going to be large either way. And so all of these markets are setting up. When you look back at these kind of setups, right, this is consolidation or potentially distribution. In a bull market, it's consolidation. In a what turns into a bear market, it's really distribution. So which is it? Is it this one or is it that one? Well, you don't never know that until it actually breaks one way or the other, and then it's easy to say, right, one way or the other. What you can do is inside that range, as you get farther out, you can start getting clues as to which one's going to happen. And so if we look, for example, using the CACs here, if we look at how it's traded and we just look at our volume tails, it's hard to say. I mean, here you got a nice big push up on this bar, right? So you got a big wide price push up here on this bar. Big destruction multiple times now, right? So there's nothing here, and here's another one that was on the way up. There's nothing here other than wide price spreads with some volume on one of them, wide price spreads to the downside, not so much wide price spread to the upside, but good volume escalation to the upside. Is that volume escalation the result of short covering? Is that what this is, right? In both of these cases, was it short covering that made that push, or was it something else? You don't really know that. What you do know, though, is that the escalation came in, and you got to keep looking for clues. And in the meantime, you just recognize there's a big range, and you wait for some sort of a signal as to which way it's going to break. So if I look at the CACs and I'm looking for key points, what I would do is I would look for areas that tell me that it's going to be very difficult to get over it. If it gets over it, right, if you trade up to here, then you got to expect it's going to test those highs. That's when you can probably take positions, right, and shoot for the upside breakout if you're trying to trade that breakout. Usually that takes place after 7 to 9 weeks or so of consolidation. If we look at the CACs one more time, let me look over here and see how long it's been. Yeah, it's about that long. Actually, it's farther than that. It's about 15 weeks now on the CACs. And, if I bring in the week. So we're getting towards the end of it more than likely here on the CACs. So here was the first break above the top side, right? And that was the week of September. So that's 5, 10, 15. You're almost about 19 weeks now, which is fairly large. Now it has gotten erratic, right? So here you had about 7 bars, and then you got the break. And now you've got 2, 4, 6, 8, about 11, about 9 or 10 it looks like. More erratic. I would think that we're getting farther, towards a conclusion to this. And that's going to be a big break. So maybe Europe will give us the clue as to which way this thing wants to break. The thing that's most interesting to me is I do believe that the CACs is probably the weakest one. But if I look at the DAX itself has been weaker of late. So you had a push down, right? Then you consolidated up there 2, 4, 5 bars, 6 bars, 7 bars now. So it's about, you got about 7, 8, 9 bars totally on this wider range that's taking place here. And so here I've got a big wide range again with a lower half and a top half. It's at the bottom half of it. So you can see this one's a little bit weaker. Look at your volumes on the way down compared to up, mostly favoring the downside. If I go back over here and look at the daily, you can see how much more weak this one is. Now maybe that's a function of the fact that it was much higher than the CACs and the money's rotating into other markets. if I'm looking for tells on this one, you know, it looks almost like the CACs in that the wide price spread bars, you know, are the downside, right? The big wide price spread bars result of a downside. And then we have the big high volume bars, you know, going to the upside, just like the CACs, right? High volume. Although here, CACs you had one, here you didn't. So this one looks weaker. So the DAX may end up being the tell in Europe more so than the CACs, but both of them range trade. Let me look at Hong Kong. FTSE really didn't tell me anything. I looked at it earlier. So the Hong Kong market, this one will be probably the one that gives us a nice clue overseas. You had multiple swing points break, right? There was 4 of them here. That leads to a huge downside, which is exactly what happened. ABCD structure, it plays out, now you're getting the bounce. Will it come all the way back up here to do a retest regen, or will it fail somewhere in between? In other words, does it fail in this resistance zone, for example, and then set up another ABCD structure to the downside? If we look at it on the weekly, and the reason I say potentially it does that is if you look at it on the weekly, this thing tested into that low, 77.3, you test into it with 96, you did hold that swing point low, and that's probably because it's so extended, right? You've already gotten your ABCD structure on the way down more than what was expected, right? So it's extended to the downside, going to get a bounce up, and then probably come back at it again. So in this particular case, that bounce up could take it maybe into here, and then it tries to come down. You got huge volume at the lows on this guy. And so the weekly on the Hang Seng, as you continue to gravitate towards it, I would think the target should be that top at least, that top of that high volume bar. And you got a lot of volume in this area, right? You got 3 bars here, all of them have lots of volume. That should be the target, and actually it actually got almost into that, didn't it? That low was 21,197. Yeah, it actually got into the first of the big ones. But the key zone is right down here. That would be the spot I would think it probably goes for before it's over with. So some sort of a bounce and then come back. So bounces here potentially, we could look at some more of Asia, potentially some bounces in the other ones as well because they're oversold. But if you look over at Europe, big range trade, more volume tell, more wide price spread bars to the bottom instead of the top. If we look at our markets kind of have the same characteristic in that you're pushing lows with volume. All that tells me is that these are range trades and that one has to continue to opt more so for safety than speculation because the market is not the same market it was last year. You know, it's not a bear market by any means. It could certainly turn into one, but it's not the same market you saw last year where at every turn the buyers were there and just pushing it higher. And that you know, that flavor, you can just feel it. That flavor is not there right now. All right, let's see if I get any questions I might try to answer. I don't see any there. Let me check the emails and texts. Nothing there. Okay. Well, this week to me and potentially next week are going to be pivotal weeks. You got Janet Yellen finally on the Hill. She's going to talk, right? Bernanke's gone. You know, he's the history books now. So Yellen's going to pick up the torch and carry on. You've got tapering starting to take effect here. You've had tapering taking effect in Europe. That's probably why you see the weakness over there. You have tapering, if you will, in China. They've certainly been constricting their money supplies. And then if you look to the other big markets like Japan, Britain, you know, there's nothing in the way of tapering. So as the money constricts a little bit, and we're not talking huge, but we're definitely peeling some off, you know, that should reflect itself in these markets to some extent. Because you've got to believe some of that money is finding its way to these markets, and a lot of these gains that we've seen is a result of that money finding its way to these markets. So will that tapering have effect? Will Yellen be able to just pick up the torch and carry on a nice transition without any issues? Or will we gyrate more in this large range that we've set up now? Will that gyration take place and continue? I suspect it will. I suspect you're going to see some sort of a pullback here, whether it's from this level, whether it's from that level. How far it pulls back will also be a question. And will we push back up and try to test these highs before it's over with? Or will we simply come down and fell here and set up another ABC structure to go test the bottom side? All of it's game, and these are big points now. So if you're going to trade them, trade it from the perspective of the daily time frame right now. That's where the trades are going to be. The weekly is going to resolve at some point, and when it does, if it's to the upside or to the downside, it's going to be a big move. That's the one you want to catch, right? If you're going to catch one, be sure and catch this one, whichever way it wants to break. Folks, have a great night. Thanks for joining me. I'll see you tomorrow night. We'll do it all again. Until next time, I'm L.A. Little. This is and was your weekly TA Wrap. Have yourself a great night. Take care, and I'll see you on the next show. Good night, folks.